Hope you're having a great day. Got another question in from one of our clients, and the question was, what do I do with my saved premium? So let's take a look at this and see what we can come up with. So what this individual has going on is they've got an existing life insurance policy and they've got cash value. And for this specific case, they have $70,000 of cash value, but they've also got about $63,000 outstanding as a loan. And so the question came up, hey, I'm paying my premium annually, and my premium is $12,000 per year. So that means that every month this person is saving $1,000 so that at the end of 12 months, they've got the $12,000 to pay their premium. And so the question was, is this a good idea? And I said, well, compared to what, right? Everything that we're going to do is going to be in a compared to what lens, because just because something may look bad in one respect, well, what are you comparing it to make it look bad? So for this person, we've got two options. We can either save it in a savings account, or, hey, you've got a $63,000 loan. What if you repaid along the way? Which of these would work better for you? And so now we can actually look at it. Now that we have a comparison, we can see, well, which one of these choices is going to get us closer or further from financial freedom. So I made a quick spreadsheet for you. And I said, well, hey, if we were going to save, and we're going to say we're saving $1,000 a month, and the rate is going to be 1%. The bank that I'm using here fictitiously is a super generous bank. I just got off a call with a nice young lady who had a 0.02% in her savings account. So one is being super generous. So we know that if you put $1,000 in and it's at 1%, at the end of 12 months, you would have made about $10 on this thing. The next month, you dump another grand in. Well, now it's only in there for 11 months, so it makes $917. You guys can see the progression. By the end of 12 months, you would have, in this scenario, actually generated about $65 worth of interest credit towards you. So not bad, right? Don't forget, you also got to pay some tax on that. But what are we comparing this to? Well, what if we had instead repaid our loan along the way? Well, we can see here that for the very first month, that you would take that $1,000 and decrease your outstanding loan balance. So cut a check for $1,000 to the life insurance company, decrease your balance. If you let that ride for 12 months at 5% interest, that would have been $50 in interest savings that you would have had. So that $1,000 going in there would have reduced your daily outstanding balance by $1,000. So now you're not paying interest on it. Well, what happens if we extend this all the way down for 12 months? Well, now you actually saved yourself $325 in interest expense. So again, compared to what? In our first example, this individual was putting $1,000 a month into a savings account so that at the end of 12 months, they would have $12,000, which is number one, phenomenal. I like doing my budgeting that way too. You got to be responsible, save the money on the side, but is there a more efficient way to save it? So this person saved $65 of accrued interest that they got by storing it at the bank. But if they had repaid, they actually would have saved themselves in $325 of interest expense. So now you can take a look at this and say, well, if I save my money in a savings account, or if I have a loan balance and I can pay down my loan balance along the way, and at the end of 12 months, take out another loan for the $12,000, well, which one of these is better? I don't know about you guys, but I'm pretty good with a $260 benefit in my favor, right? 65 for the savings or 325 for the repayment. I'm going to knock down that balance if I got it. But you guys can make the decision now, and now you can look at this objectively compared to what. So if this has been helpful, if this is something that has, piqued your interest and you want to learn a little bit more, hey, go ahead and scan the QR code. Again, my name is Mark Haraguchi. We're here at Wealth Without Wall Street. We would love to hear from you and see, is this a fit for you, as well as does the infinite banking concept fit into your bag of tricks? You guys have a great day.